All right. Welcome, everybody, to the Wealth and Motivational Show. Today, we have Tony Elion Jr. today, the author of Sailor to Student. Welcome, Tony. How are you today?
I'm doing well. I appreciate you having me on.
Thanks, man. After speaking with you throughout the years and seeing how you've accomplished so many things in life. I mean, college student, you went on to join the Navy, you an author. Actually, it was when you came to visit me and my family in South Africa. I was saying, it'd be nice for, friends and family to come visit to get a chance to explore the continent of Africa to see how developed it is. But a person like you, you're well traveled. You took the invitation, you came and visited, and then you brought me a gift that just changed my life. You changed my life. You brought the book, Sailor to Student. Oh man, how I made $250,000 in the stock market, and you can too. And I said, how did you do it? How did you write the book? And you shared everything. You said, Mike, do this, do this, do that. I was inspired. You said, you know what? You have to leave a legacy because I was holding off. I was like, let me wait. The time to do things is now. And you've done a lot of great things since. That's a mouthful. So why don't you kind of tell us about your journey before you wrote the book?
Yeah. So I was, like any other person, I didn't have any exposure to finance. I never went to a business school. I didn't know what investing was, but I knew I didn't want to continue to live paycheck to paycheck because that's what I had, done all of my life. And that's what I had seen the people around me do. No one I knew was actively investing. We were just living, going through the normal day to day. So I started working for Amazon. And when I started working for Amazon back in 2011, I one of the things that they did at the time was they would give shares to every person that worked for the company. Like they would just,
okay,
you take these shares of our company because you work here. We want you to be a part of the company. But those shares, you didn't obviously get them immediately. They had to vest. So you had to work for the company for a couple of
Let's
years.
break it down for the people because I know exactly what you mean when you say shares, right? But we got our new beginners who new to personal finance. So what exactly is a share and how wonderful was this opportunity for you?
Okay. So a share is one piece of stock or one stock for a particular company. And, it's broken down to the valuation of the company. So every company that is publicly traded, you can go into the market and buy shares. And so you become an owner. You have a small slice of the pie of that particular company. So what Amazon was doing at that time, they no longer do it. They were giving shares of their company to their employees.
Wow, that's deep. They was given part ownership, which means you enjoyed the profits.
Absolutely, because that share of stock has a value, and each year as Amazon would grow, the value of the stock would also grow.
Okay.
So at that time, it was roughly around $160, $170 a share in 2011 when I got my first two shares. By the time I cashed those shares in 2000, right around 2018, it was about, I don't know, $2,000 a share.
Wait, whoa. That's a nice little piece of profit there.
Right. But you also had to, from 2011, you had to hold that. This isn't always a get rich quick, and you had to be disciplined and watch that company grow and watch the share of your stock grow. So from 2011, 7 years later, that's when I decided to cash in those stock. But like I said, the vesting means that we're going to give you this thing, but it doesn't become completely yours until a set time frame has passed. So they said, we'll give you this stock. We give everybody stock, and but you have to work with the company for 2 years. After 2 years have passed, then that stock becomes 100% yours, and you can keep it, you can sell it, you can transfer it to your children, whatever you decide to do with it, because it's yours at that point. But if you work for the company for 8 months and you quit, that stock goes back to the company. You don't get it. Okay. So it was one of the situations where it worked out for me by accident. Once again, I didn't know what investing was. I didn't know about stocks. I didn't know shares. I didn't know anything. So I ended up going to the military after I started Amazon. So when you go to the military, you can take a military leave of absence. When I went away for 4 years and I came back to Amazon, okay, now those stocks they've all vested now. And each year they were giving me more and more stock, because every year they would give you new stock because you continue to work for the company. So by the time I started, I had 2 shares. When I got back to Amazon after completing 4 years in the military, I had 19 shares. So the value of it had grown from like $170 to about $970 in 4 years. Okay. So it was one of those where that gave me an opportunity to see in real life, because I had no idea the stock was there. I had no idea. I'd forgotten all about it. I was just, okay. I was just going back to my job, and they were like, well, not only have you gotten all of the pay raises, but every year they've given you new stock. Here is your portfolio. And it showed me what happens over time. You can't just get the stock and sell it. You will lose out on a lot of money. So there were a lot of people who got stock. And when their 2 years came, they sold those stock. So they sold it at $300 a share, $400 a share. It never made it up to the $2,000 or the eventual $3,000 per share that Amazon topped out at.
Okay, I'm tracking now. So basically, what I heard is that you were getting these shares and you really didn't understand how they worked at first. You knew it was some stock. However, since you wasn't touching it right away, you came back to it a couple years later, and then you got a chance to see the power of how investing works, your money, you invest in something, and then it can grow over time. You're not going to get rich tomorrow, 1 year. No, it's the long game.
Right. Absolutely. So, the more that you hold on to it, generally speaking, now there are some times when, if you see that a company may, not be doing as well as it, could be, or there's some kind of crisis with the company, then you may want to cut your losses and sell. But generally speaking, when you have strong blue chip companies that aren't really going anywhere, your Googles, your McDonald's, Coca-Cola, you can watch them grow over time.
Okay, over time. Okay. And then you got back, you're sailor to student, and you talked about how you made a pretty penny in the stock market. So I imagine once you saw how those shares vested, that kind of inspires you to take another path into personal finance.
Absolutely. Once I saw the power of, because the biggest thing for me was this was money that I now had, because I think the account at that time when I got out of the military was worth about $18,000. This was money that was mine. I owned the stock, and I hadn't worked for it. What I mean by that, I didn't punch a clock. I didn't have to go in every week and say, okay, if I take $500 out of my paycheck and put it in a savings account that has 0.01% interest, maybe over time. No, I found it. There's a way to make money without leaving my home.
Ooh, that is a gem and a nugget, right there, letting people, if you kind of pause and really let the message soak in. What you're saying is that traditionally people are used to, I go to work for 8 hours, and then in return, I get paid a fixed amount per hour.
Right.
While you went to work, you had your money, the stock that was making money for you all day, all night, 24/7. It was making money for you. That
Absolutely.
passive income. Wow, that's deep. All right.
Absolutely. And that really, all the bells went off then. And I said, wait a minute, there's a different way to do this. And I know it's the old adage of work smarter, not harder, but that's just a lot of these adages or sayings until you see them actually manifest. So for me, I saw there's a different route that you can take via investing. And it clicked in my head because while I was in the military, I saved up, I think about $60,000-$70,000 because I wasn't really spending my money. In the military, your housing is paid for, your food is paid for, your utilities are paid for, your medical is paid, and you get a check. So that money is just stacking up on years. But the problem was I stacked up all of that money and I had the 50, 60,000 to show for it, which is an accomplishment. I'm not taking anything away from that. If you've saved 50, 60,000, that is a wonderful thing. The problem was when I got out of the military and I went back to Amazon and I saw that portfolio of 18,000. If I had taken that same 50 or 60,000, instead of sitting it in a savings account, if I had parked that into Amazon stock, I would have tripled or quadrupled that amount of money that I had saved.
Right there, you said something that's near and dear to my heart because I see a lot of people who they're doing the right thing. They're saving their money. They have their money either in their 401k account, their retirement account, but the instrument that they're using to make money is not growing as fast as it could be. It's not working as hard as it could be. And I built a course, in the course Build Generational Wealth course. I break it down like this. If you want to travel 600 miles and you're on a bicycle, how long is it going to take you to reach your destination on a bicycle? Now, if you're in a car and you're traveling 600 miles and you're going 60 miles per hour, you might get there in about 10 hours.
Mm-hmm.
Now, imagine if you jump in an airplane. Mm-hmm. And so the question becomes, what's your goal? Is your goal to reach your retirement destination as fast as possible? Or are you trying to be on the bike and sightsee for 2 or 3 days, right? Most people are trying to get to that retirement destination sooner rather than later. And that's the problem with when you let your money sit in, 1% savings account, you have your money moving at the pace of a bicycle when you're trying to go from Florida to New York.
Mm-hmm. Mm-hmm. Yep. Absolutely. And there is it's an acronym. I didn't create this. There's a group. It's called FIRE, Financial Independence, Retire Early. And that's the type of motivation I have. I don't like to go to work. I know I go to work every day. And it's because I haven't hit the Powerball or whatever the case may be. It's not because, I just have a passion for getting up and going to work and fighting traffic. So the sooner I can retire, the better. And it's not, I think the preconceived notion of retirement comes at 65 or 70 or 40 years after those days are gone, but they're there if you want them to be. If you want to work at this thing for 40 years, great. If you don't, then you need to be actively trying to figure out a way to get your investments to grow and to get money coming in passively that you don't have to go out and work for, which there are dozens and dozens and hundreds of ways to make that happen. You just have to figure out what's the best way for you, your finances, and your family.
Exactly. So fast forward, you started investing, and then you actually you went above and beyond. You shared some of the information that you learned in the book, Sailor to Student. Can you kind of touch on the book a little bit?
Yeah. So what ended up happening was I went to law school and I figured out, once again, everybody's a part of a game. Life is a game. You just have to figure out what the rules are, how to play the game. So what I figured out was, I have a GI Bill. This GI Bill is going to cover all of my cost of law school or whatever school. You could have went to medical school, engineering school. It's going to cover the cost of school. Any scholarships you get come back to you in the form of a refund. So my first set of scholarship refunds came back in law school, that first week of law school, about I don't know, $25,000.
Okay.
So I took 5,000. I paid my bills for the whole semester. That's your rent. That's your school books. That's your, gas, whatever, groceries. I put money away. That other 20,000, I had saw the power of Amazon. I invested that entire 20,000 in Amazon stock. And over that semester, the stock increased. The next semester, I did the same thing with Netflix. I had saw Netflix grow as a company. They started out selling, not selling, but like you could get a DVD mailed to you and you'd mail it back. And they went from that type of business plan to, oh, they create their own movies now. They create their own programming. So I invested another 20,000 into Netflix, and by that next summer, both stocks had doubled, and I had made a nice profit. And I always tell people, they say, when is the best time to sell your stocks, to get out? I say, for me, I determine when I'm going to sell my stock based on what my next investment is.
Mm-hmm. Okay.
If I have a course of action where this money can make me more money, all right, I'll sell it. But until then, unless something, like I said, crazy is going on and the company's on fire, I'll let it grow. So I got a phone call from a buddy who I went to college with, and he said, I'm watching you with the stocks and the things that you're doing. So, I don't know if you know this, but they're about to legalize marijuana in Canada for the whole country. You should look at some of the marijuana stocks. I said, okay. And let me preface by saying I do not encourage this. This was me being young in my trading and investing. I thought about what he said for about 24 hours.
Okay.
And I sold all of my Amazon stock, all of my Netflix stocks. I liquidated, and I invested in that marijuana stock.
Okay.
And over the course of like 13 days, I think it was, I made like $175,000.
$175,000.
Yes.
Wow.
But now, moving forward, this was about, I think it was either 2018 or 2019. It had to be 2018. But moving forward 4 or 5 years and having invested and know the market the way I do now, I wouldn't do that again. That was a very bold play that happened to pay off. And it worked out. I wouldn't go all in on something I hadn't done research on. So it was a bold play that worked out very well. And that's all of those movements are what created the book, because I had gained enough knowledge and I had been successful enough where I felt that I could say, hey, on a very basic level, this is what I did, and this is what is possible when you use your money as an investment. A lot of people in our society, we are consumers. We are born and bred and taught to consume. We spend the money with no real return on our investment. We will buy things that are mostly depreciating assets. And at the end of the day, or the end of the life, or whatever, when it's all said and done, we don't really have things to pass back to the next generation because we consumed, we didn't invest. So I wrote the book from the perspective of, man, I wish somebody would have told me this when I was 20, when I was 30, when I was whatever. So all of the things that I wish someone would have said to me and broken it down in a way that I could understand, that's what made me write the book. I wanted all of the secrets that I had figured out to be put out there for anybody to have.
Oh, that's wonderful, man. I'd like to give you a applause for that, for sharing your knowledge with other people so that they can, learn from you, right? Because we learn by watching others who've been successful and also learning from their mistakes. And oftentimes we sit and wonder, like, how did that person do it? How did they make it? And what you did is you've taken away the excuse, because if someone wants to learn, they're going to go on Amazon and they're going to buy the book, right?
Mm-hmm.
They're a student, they're going to learn more than what they know today, and they're going to be entertained. It has many reviews on Amazon, which shows you that, it's a great work of art, a great product, and you're sharing your knowledge and wealth and everything. So you wrote the book, and then you wasn't done. Like you graduated from college, you went into the Navy, you're at Amazon, you're in law school,
Mhm.
and then tell us about law school and what's going on. Any investments since then? What happened afterwards?
So after I because I think when I finally settled down and sold all of my stocks, I had made about 300,000, 325,000. And so let me say this, when you do make money in the stock market, you have to pay taxes. All right. So don't forget that part, because Uncle Sam wants his piece. And so when I paid my taxes, I think that year that I had the most success, I paid like 40, maybe 45,000 in taxes, because all of the money that I made was through stocks. Once again, I made hundreds of thousands of dollars and I never clocked in. I didn't have a paycheck. I never went to work. I never had a W-2. And so that money is taxed at a higher rate. Like I couldn't do any of the, deductions, and you can't deduct. You can only make deductions from wages.
Okay.
So this was investment money that was coming in, and it was a short-term gain. Like I didn't hold it very long, and I made a lot of money very quickly. So remember to keep a portion of that for taxes, because if oh, he made 300,000, yes, he did, but 40 of that went to taxes. Another 40 of that, maybe 50, went back into the stock market. Every investment that I made did not make money. So there were other companies that, when the market took a downturn, or like I lost money on Amazon because I started to do what I knew I shouldn't be doing, which was I would invest, try to make some money real fast and pull out. And when the market would drop, I've already pulled the money out, and it's like, oh, well, I lost 5,000 or I lost 10,000, and because I got used to making money very fast and a lot of it. Okay. So I was like, okay, I got to settle down, because now I'm getting greedy. I'm not sticking to my strategy of letting the money grow. So I ended up pulling the money out of the market. And what I did was I said, I'm going to diversify a little bit. I want to have something that I know will make me money no matter what. So I went out and I bought a house. I paid it in cash. Okay. It was maybe 170,000, something around that. And I put maybe 30,000 into getting it up to, speed, new paint, all of this good stuff, new wood. And now I rent that property out. So that property is bringing in maybe 1,800 a month, and I'll get that for the rest of my life. So that's one of those things where you have to remember where the seeds came from. The seeds came from Amazon, that original stock. I sold that stock when it grew, exponentially, in order to invest in the cannabis stocks.
Right.
That made me more money. I took that money, I bought a hat, and so those first stocks that I got in 2011 that were free from Amazon, I will always make money off that, because I have rental income that'll come in no matter what's going on. So I have one form of passive income right now, that if I retire tomorrow, I know I'm still going to get $1,800 a month for the rest of my life.
All right. So it sounds like what I'm hearing from you is that you prefer to take the proven path to success, versus, you can go take 100,000 and put it on the roulette wheel and go all in, or you can go slow and steady. Right. And what you're doing is you're building generational wealth one step at a time.
Absolutely, because and I still have stock in Apple. I still have stock in Amazon. I still have stock in Google. When they did a lot of the stock splits, I went in and made sure to buy as much as possible. So no, I still have a stock portfolio, but I wanted to diversify it and have real estate as well, because we all have a finite amount of time. And when I'm not here, I want all of the hard work and the sacrifice that I did to go to the next generation so that they don't start at, square one. They already have these things. They have a life insurance policy that's going to give them a couple of $100,000. They have property that's worth a couple of $100,000. They have stock that if they leave it alone will be worth a couple $100,000. And, that way they set themselves up for success. And now if they're starting at, square, not square one, but they're starting at square 25, then their generation after them should be starting at square 50. And
yes, exactly. Since you touched on the next generation, I couldn't help but bring up something that is a passion of mine that I've been working on. Is called Build Generational Wealth in 5 Steps. I wrote the book. It's in a story format. It teaches personal finance, but here are the 5 free nuggets. Buy 20-year term life insurance. Invest in your 401k so you can get the match.
Mm-hmm.
Your employer, you put in $100, invest in yourself. Your employer is also putting in $100. That's 100% match. Then pay off your consumer debt. Invest in an individual retirement account. Basically, the IRS is allowing you to get a tax discount on your investments. Mm-hmm. As you heard earlier, when you make money from the stock market, depending on the account that you have it in, you're going to have to pay taxes on that money based upon your tax bracket. And then the last nugget, as Tony mentioned, you got to open up a child savings account, something for the next generation so that they can start off ahead from where you started off. So by opening up a child savings account, some type of investment account, your children can learn how to invest at an early age. I mean, Tony, if you knew what you do now at age 20, how much of a difference would that have made in your life?
We probably more than likely wouldn't be talking right now because I would be on somebody's beach or somebody's yacht. It wouldn't be somebody, it would be mine, because I would know those things, and I'm being facetious. Obviously, we'd still obviously be friends and be talking, but it's, your life would be totally different. Now, I do believe that. I think that somebody along the way has to take the chance. Somebody along the way has to sacrifice. Somebody has to be disciplined in order for generational wealth to actually occur. So one of the examples I always use is we all know, the vast majority of us know Percy Miller, or who goes by Master P. Yeah. And his success and the wealth that he has multiple businesses. He has Rap Snacks and all of these food products now, but it all came from a $10,000 life insurance policy that his grandfather left him. He took that money.
Let's repeat that again. Let the listeners kind of, soak on that, right? Let them soak on that. He got $10,000 from a life insurance policy.
Right. So I don't know the grandfather's name, but Miller is the surname. So Grandpapa Miller said, I'm going to make sure to leave something behind for my grandkids. And each of them got $10,000. Now, Master P took his $10,000. He went out to California and he opened a CD place, a record place that sold, like a record store. They sold records, tape cassettes, all of that in the late 80s, early 90s. It was called No Limit Records. Okay. He had success through that. And he turned that into a music company, where he had artists and he recorded his own music, and he, took that and he goes on to make movies and do all of these incredible things. But it always goes back to the seed. Where did the seed come from? It came from the grandfather saying, I'm not always going to be here. Let's make sure that the next generation has somewhere to start. I can give them some form of a platform to go to the next level. And he did. So I say all of that to say that it's important to, like you said, have those life insurance policies, to be forward thinking. And somebody has to be the one that takes a chance. Like, okay, like right now, if I drive a Volkswagen, Yes, I would love to have the new Corvette 2023 or what like they're phenomenal. I would love to
Yes.
have a Range Rover but if I invest that money in that depreciating asset, that you only got so much money. Most of these resources that we're trying to invest and trying to time is a resource. You only have so much. It's finite. You only have so much. So you have to decide, you know what? I'm going to be the one that says, I don't need that. I want to invest, and on the back end, I will, I'll let my investments pay for the Range Rover. I'll let my investments pay for the house upgrade. I'll let my investments pay for whatever it is that, because a lot of the money that I've made, even now, if I want to do something incredible, I want to take a vacation.
Right.
All right. I want to go, and travel in Europe for a month. Well, that's going to be $3,500. Okay, no problem. I'll take this rental income for the last 2 months.
Yeah.
And I'll let somebody else pay for the things that I want to do, my enjoyments or my next investments or whatever the case may be. But you have to be willing to sacrifice on the front end. And I don't, I don't know how to teach that part.
Yeah, yeah. Because what you're saying right there is the most important part. What you're saying is if you can just hold off on instant gratification today and believe that tomorrow's gonna be brighter, tomorrow's gonna be better, that don't eat the fruit from the tree as soon as it starts to grow.
Right.
Let the tree mature and be stable before you start plucking from the tree. And then once it's mature, that tree is going to produce so much fruit that you won't even have time to spend it all.
Exactly. That's why, like you said, it is important. If there's free money out there, if your employer is matching your 401k, take advantage and put the money away in the 401k and leave it there. Don't go and mess with your 401k money. Don't go and mess with your IRA money. It hasn't had a chance to fully bloom yet. And if you don't have that discipline to say, I'm going to take this money out now and put it into the investment and leave it alone, then you'll never get to really benefit from these programs that are designed to, multiply your money.
Well said. Well said. Any words of encouragement for the people who are listening who either scared to invest their money, they only have $100, or they're looking at trying to do a quick flip in real estate? Any last piece of advice that you wish you knew or that you would like to share to our listeners?
Yeah, I think that if you have a little money and you want, first of all, you got to define invest. Like, everybody's an investor. I don't care where you stand in life. You are an investor. You're investing in something. If you sit down and you watch Real Housewives of whatever, you're investing your time into that. All right.
You are an investor. Basically, you're sitting down, investing your time by sitting there for 1 hour, 2 hours, watching the TV. So you're investing your time into something.
Absolutely.
Yeah.
Absolutely. If you go to a job and, you're making, I don't know, $12, $13 an hour, but you have the ability to make more. It could be, you have to become a manager now. And like becoming that manager, you have to take on more responsibility. And you like, I don't want the responsibility. It could be, I'm 1 semester short of getting my degree, or I need to go take the test for this particular license. Whatever it is, you have to make that investment. You have to make that sacrifice so that you can get more, so that you can invest more. All right. So what I would say to a person who has $100 or a limited amount, but they still want to invest, the first thing I would do, and you don't have to buy my book, go to the library. Those books are free. I would get me a book, Investment for Dummies, stock, how to pick stocks for dummies, whatever it is, because I started with those same books and I talk about that. I would invest my time in learning about how money works and how to grow money, because it's not as complicated as they make it out to be. They have made this out to be
Yes,
some kind of difficult blood sport that only the geniuses of the world. No.
they have, and I'm trying to, talk to people about it. That it's easier than what you think. Like
Mhm.
they're creating all these products out there to confuse you, and
Mhm.
a car is meant to take you from A to B, right? A
Mhm.
car takes you from A to B. They got all these different brands and styles, but it's the same thing. And
Right,
the
right.
purpose is to take you from A to B. And yeah, you're spot on.
So I tell people all the time, I'm like, look, don't overthink it. Don't let these people scare you. It's like, back in the day, the young girls would play a game called double dutch. They take two jump ropes. And the key to double dutch, I've never done it, but I've observed it. The key to it is finding the rhythm. If
Mm,
you find the rhythm of the ropes, that's when you're going to know when to jump in. So a lot of people are afraid because, when you deal with finance and investment, annuity, all these terms that you may not be, familiar with,
yep.
they don't want to watch CNBC. They don't want to watch Bloomberg because people are using terms that they don't know and they're talking over their head. It's much easier to watch something that I'm comfortable with.
Right.
But when you watch these shows, they're saying the same thing. You just got to find the rhythm. And where do you find it? That's why when I wrote the book, Sailor the Student, I wrote it in a way that it's a conversation. You are talking to a person or you're reading from a person who had no background in finance, had no understanding of investments, had never made any money, didn't have any experience in the stock market. And if he can do it, you can do it. This book made it to the front page of yahoo.com. This book allowed me to write articles for CNBC and for Business Insider. This book was touted twice by Black Enterprise and Vice President Alfred Edmond Jr. And these wonderful accolades didn't come because, oh, it's this great art of finance. No, it's because he broke it down in a way that the average person can understand. It's a conversation, it's simple, and it's honest. So this should be a guide that helps everybody at a very basic beginner level get to that next level. So, like I said, first thing, invest in yourself by going and getting a book, something simple so that you can understand and take advantage of that. Make sure that you have that your life insurance is taken care of. You want to have that kind of fundamental foundation before you start trying to jump into major investments because you want to have car insurance, you want to have renters insurance, homeowners insurance, whatever you have, so that you don't end up in a situation life insurance where, oh, all of the things that I was trying to do got sidetracked by a fire or somebody broke in or a car accident, and now I'm having to use this money that I would have used for investing to pay for this other thing. Then once you feel comfortable and you have your foundation set and you're taking advantage of like your 401k and things like that, those money matches are there. Then what I would do is I would take that $100 and I would find me I'm sorry, let me step back. Before you get to the $100, download and follow sites like the Facebook, Instagram pages of Business Insider, Yahoo Finance, CNBC. That way, as you're scrolling, we all scroll on social media, you'll
Yep.
see little things. It'll pop up in your news feed that this thing is happening, or there's a stock split, or whatever the case may be. Then I would find these stocks that I feel comfortable with and set me a price point. Whether you say, I'm going to put $100 a month in my index fund. So at the end of the year, you got $1,200 in your index fund, or I'm going to put $1,200, $100 a month in my mutual fund. Or if you really want to, because stocks are really low right now. I honestly think we're in the heart of a recession right now. So what I would do if it were me, I would look at companies like Google, who are around $80 a share. Take that 100, I got one share. At the end of the year, I got 12 share of Google or 12 share of Amazon or 12 share of Starbucks or whatever the case may be, because over time, that 12 share that you had in 2023 is going to be valued a lot more in 2033.
Definitely.
and it came, incrementally, but over time, you were able to start investing and start seeing the growth. And then I promise you, when you start seeing your money grow, you're going to find money in other places to invest. You know what? I don't need to go get my nails done this week. I'm going to take that 40 and I'm going to, because you see that 40 turned into 80 and that 80 turned into 160.
Exactly.
There's no return on investment with those fingernails or pedicures.
None whatsoever. Wow, you touched on a couple of things I gotta enlighten the viewers on. One is the buying the stock, right? Nowadays, with like M1 Finance and these other financial institutions, they allow you to buy fractional shares. What that means is that it used to be that you had to have $80 to buy a share of stock. That means we'll give you one share of stock, you give us $80. Now, like M1 Finance and Fidelity, they just switched over. Fidelity allows you to buy fractional shares. What that means is that if you have $20, we're going to let you have 25% ownership of a stock. So bring your money, $20, $50, $100, whatever you got. Come on in, bring it in, and you can invest. I like M1 Finance because I can take my $100 and I can select 20 stocks, and $5 will go into each one. So there's no reason at this point in time why you're not investing your hard-earned money,
right?
At all.
Right. I want to say this. I just got a Christmas bonus with the law firm I worked for. I took that entire bonus and put it into my brokerage account. That's going to be stock, because I'm not going to work at this company forever. But you should always take something away from a company so that I can look back 15 years from now. Oh, those Apple stock. Yeah, that's when I worked for. I'm still making money off of that company, even though I haven't been there in a decade.
Hey, that's a good point. That's a good point. Well, as we wrap up, everyone, please make sure you download the Build Generational Wealth Wealth Planner Guide. It's free. It's available. Take a look in the links for the document. This will have you thinking about your money, where you're at right now, and the tools that you need to retire early. Tony, appreciate you being on the show today. Look forward to part 2 of our discussion. Maybe you can interview me next time.
Absolutely.